Good morning, everyone. This is Srikanth Rajan, and welcome back to the Stock Market Podcast from MPIinvest.com. Well, yesterday we had a detailed discussion on the implications of the SVB, the Silicon Valley Bank, on the US market, and how that spiraling effect can be seen in Indian market as well. So, of course, we had also discussed that how the US Federal Reserve can probably reduce the damage. So that has happened. So we will discuss about it today, a little while later. But before that, let us have a quick look at what happened last week. So last week was again a very volatile week. The day started off. The week had a holiday for Holi. So Monday, the market kind of rallied up. Tuesday was a holiday. Wednesday, market again rallied up. So 2 days of big rally was seen, and then on Thursday, a big fall thanks to Jerome Powell, who gave a hint that they would be on track to increase the interest rates by 0.5%. And from there, the next day is when the Silicon Valley Bank came into picture, and we could see a big gap down opening on Friday, where the market did fall, but then by end of day it recovered and still closed above 17,400. So this is what happened, a brief of what happened last week. And coming to this week, so again, like I told you yesterday in the our meeting, MPA family meeting, so the government had to take some action and had to give some confidence to the investors, and that's exactly what has happened right now. So though the US government initially denied of bailing out the bank, bank was taken over by US government, and then there were a few developments that happened after overnight. So if you look at last night, there was an announcement from the Federal Reserve that they have come out with a special term loan available to banks, so that the banks can take them and use that fund to repay the investors. So this is a good move, I would say, because see, it is not that the bank had a scam or the bank was in trouble. So it was a good bank, just that since the withdrawal was so huge and they did make some big loss in the bond sale, it is that all these things which actually kind of put the pressure on the banks. So right now at a high interest market, selling old low interest bonds was something which is of course going to affect a lot of banks. And now that the government has stepped in and given an option of a loan that these banks can take easily, so that can be a breather to all the banks in the US, I would say. So this is something that gave some positivity. We could see Dow futures up by almost 300 points overnight, and this morning when I looked at it, it was up 300 points. So I was expecting a similar kind of positivity in Nifty as SGX Nifty as well. And in fact, it was good to see almost a 50-point up move as SGX Nifty opened in the morning. But then by the time markets could actually hold on to it, we could see the Japan market falling down. Yes, Japanese market was down by more than 1.5%, and that led to some negativity in the Indian SGX Nifty, and we could see SGX Nifty kind of trading lower. But after that, the Chinese market opened, and there was news of the current president going in for the next term, continuing for the next term, and that somehow is seen as positive in the Chinese market. And we could see the Chinese market kind of moving up. So as I speak, I'm looking at the Chinese market is up by 0.5%, Shanghai is up by 0.5%, Hong Kong is up by 1.62%, up by 300 points. So with all this, again, there is a positivity that has come into SGX Nifty. So as of now, I look at SGX Nifty, it's at 17,484. That means probably we'll have a flat to gap up opening instead of a gap down opening, which was expected earlier. So things are looking good now. So if you see the major problem that we had last few weeks, the first one was Adani Group issue. So that is kind of getting sorted. Of course, focus would be on Ambuja Cement today because they are planning almost $400 billion plus $400 million stake sale, and that could be in focus. But with that, I would say, like I said, it is a good move because having some asset sale and bringing in some fund will of course help them repay a lot of their loans, which is already happening. So I would say in one way it is actually good that Adani went through such a problem, because if it had not happened at this time of time, their debt would have continued to rise, and that would be too dangerous than what had happened now. So one way it is good, so they are repaying a lot of their loans. A lot of funds are coming in. They are doing some stake sale. So that is kind of getting settled for now, I would say. So doesn't mean it's time to enter Adani again. Definitely, I'm still staying away. That's a different thing. So coming to the next part, the next major problem is US inflation. So that is again in focus today and tomorrow, because today we have the India CPI data coming up, and tomorrow in the evening after Indian market close is when we are expecting the CPI data for US. So again, that would be again something which would bring instability to the market. So because of which we could see a lot of volatility to continue in the next few days. So today and tomorrow, I am kind of feeling that the market is kind of going to stabilize and consolidate. Or even if since there are a lot of people who have short the market, there are also chance of a short covering rally in one of these days. But then, even today, if you look at, even if you open flat or slight negative, I am expecting the market to kind of recover and probably go on a sideways or a positive side. But I'm not expecting a big fall from now. But for tomorrow, probably by end of day, we might see some sell-off because of the expectation of the US CPI. So that is something that is importantly to be watched as of now. But apart from that, I would say this is, of course, a great time to continue to invest in SIP mode in the US market as well as Indian market, because this is the time we could really clinch on to some amazing deals. And next important thing, as we are coming to end of March for India specifically, it is time to do your profit and loss harvesting. That would ensure that you stay more or you earn more by saving more in this manner, I would say. So that is how the market is looking right now. So for today, I would say the major lower side that we need to look at support is 17,200. Right now it's at 17,400. So even if there's a gap down opening, which I'm not expecting now, that probably I see a flat to gap up opening right now. But in that case, on the higher side, 17,500 would be a resistance. If broken, could see a big short covering rally, which could take the market to around 17,600 to 17,700 levels. So for this week, I am kind of expecting the expiry to be within 17,200 on the lower side and 17,800 on the higher side. So this is my expectation for now. So let us see how the market kind of takes or report or kind of recovers or kind of reacts to all these events. So however, for now, I would say the major tension is kind of reduced. So now, of course, the focus would be mainly only on the CPI data coming in from US. That's tomorrow evening. So let's see how the market goes. Wishing you all a great week ahead. This is Srikanth Rajan signing off. But before we leave, do remember to press the like button if you love the content that we share. And do join our community, which is completely free of cost. You can just go to the description and join the WhatsApp group. Or if you want to be in the interactive community, you could just send a message on the number given in the scroll here. And our team will help you join the community completely free of cost. So learn and invest. Let us grow financially together. Goodbye. See you.